Good morning, everybody. Hey, welcome to Friday, May 24th. And to think that Memorial Day weekend is right here, which is kind of the end of spring, getting ready for summertime here before we know it. And so, before we kind of get started the show today, I want to wish you all a happy Memorial Day and remember what this really means for the people that have given so much that we can have the freedoms that we still have today. And so, we're thankful for that. This week we've had a lot of market volatility. When I look at where we are so far year to date and week to date, it's been a rough couple days, a rough couple weeks here. So, again, I want to remind you of our free report before Dave and I get started um, on market corrections and what they mean. And this talks a little bit about volatility and those types of things. So I think it's an important thing to look at now that we've seen so much volatility in the market. You need to understand what it means. Uh, Text the word market to 863-285-3815. Just text the word market to 863-285-3815. It's probably a good time here to mention, too, our financial x-ray report, which is a great time to do that. You can do that by calling our office to schedule an appointment at 385-0037. Dave will be with us just momentarily. Again, thanks for joining us today.
105.7 Light FM, Maroon 5 there. Hi, it's 20 before 9. Yesterday morning I said, you think we can turn it around? Well, Phillip, Statler, and I were talking about money. It didn't turn around much at all. It was kind of a crummy day on Wall Street. Let's see if it'll turn today and see what's going on with your money. Downtown Sebring to the offices of Statler Financial Services we go, where Phillip Statler's standing by this morning. Phillip, yesterday was just crapola, and I got no charitable way to put it. How about you?
Well, it was. We started out and it was tanking when we talked yesterday morning at the open. No surprise, it started to fall pretty rapidly. Something around about between noon and 2 o'clock, we started to see buying come back into the marketplace and able to come off of those lows and finish. I won't say in good shape, but at least probably halfway back from where we had been.
Not as crummy a shape as we were in the middle of the day. How's that for a modification for it?
Hey, that sounds good for a radio guy.
Yeah, it was funny. I've always said, we were talking before we went on the air together, that I tend to watch the action at the end of the day because that tends to give you an idea as to where the smart money figures that things are likely to be and what they expect overnight. Do they feel confident leaving it in overnight to see if the world's going to end before morning? If they're worried about that, they sell like a rock. At least there was a tail upward at the end of the day yesterday, but we still ended up with the Dow down 286 points. The NASDAQ was down 122, and the S&P was down 34. Everybody was down by over a full percent yesterday. I hesitate to say it can't get worse than that, but that's still a pretty crummy day. Start the morning out with Theresa May handing in her resignation over in England, and we were talking about that, and the inside track is that guy named Boris that was kind of a hawk on the Brexit, which the investment community generally doesn't like, but England is trading up on their stock exchange now. It must just be confidence at the very least in knowing where we're going to be probably going, right?
I have to make that assumption. I was looking and watching the talking heads this morning, and they were talking about the whole Brexit thing, and I watched the last little bit of her resignation. And I guess that this Boris dude is he's a 5-4 favorite right now, and he's got the best statistical chance of becoming the next prime minister of England.
And I don't like drawing direct comparisons, but he's kind of in the Trump mold. He's one of those blunt-spoken, heck-raising type politicians that's kind of made a mark over in England, and he's kind of become the de facto opposition leader within the Conservative Party. And I was reading the same thing. He's got the inside track. At the very least, investors in England now seem to feel like, okay, fine, we're going to go through with this thing one way or the other. If we know where we're going, at the very least, we can align our investments accordingly.
Exactly. And so we'll have to continue to see what happens with the whole Brexit deal. There's still this thing that they don't think there'll be any changes to putting together a plan. They think that's still going to hit some heavy walls, and so they may just exit based on what they've already lined up. And I'm not sure how much that's what the political impact of that is going to be.
It's going to be interesting to watch over there, and I'm glad it's not on our shores, but it's a world economy, so consequently, it's something we got to watch. Europe being a substantial trading partner of ours, it's kind of a tangled web to undo, especially with the British Isles, because they've got a trade agreement with Ireland, which is an independent country, and there's a lot of backdoor opportunities the Euros are worried about. So consequently, it becomes a little bit more tangled than just, hey, we quit, goodbye, that's it. And that's kind of the reason why it's gotten complicated. Our own individual reports coming out this morning. The only macro news I start the day out with is durable goods. It was down in April by 2.1%. Phillip, was that a surprise pleasantly or unpleasantly? Because it's kind of an El Stinko number.
Yeah, it is. I had durable goods down 2.3% was expected.
So it's actually better than we expect. The actual better than, well, less bad than we expected. Good news.
Yes, so. That's good news. That's good news. Hey, on the other front, though, on the macro side, yesterday after you and I got finished talking, the new home sales came out. I don't know if you remember, but a couple of days before that, we had existing home sales, and it was a miss. It was down to what consensus was. New home sales was higher than the consensus estimate by about 2,000 new homes. So there's some good news on that front. So it's kind of a mixed deal when we start looking at real estate.
Understood. Couple of pleasant surprises on the macro front in the last 24 hours, which is kind of a nice change from what we've been getting recently with all the weird news out of the trade war, which, by the way, has been relatively quiet overnight. A few companies also reporting this morning, and we actually have some good news out of a couple of them, I gather, huh?
We have good news and bad news, Dave. Let's start with the bad news, though. And they're all pretty much retail oriented. And so we've got Foot Locker coming out. They're the ones that have the retail footwear, tennis shoes mostly, that kind of stuff. And they missed by 7 cents a share. Revenue was below forecast. And one of the big key metrics is same-store sales, and they missed by about 0.5% there. So not good things there. If you have anything on your down list, they should be on your biggest down list because they're down 10% this morning.
Yeah, I was showing them at the top of my loser list. So when you told me you had Foot Locker, I knew you were going to start out with bad news when you mentioned them. Any others?
The flip side of them is going to be Hibbett Sports. The sporting goods retailer. They came in 29 cents ahead of estimates, and obviously they beat on revenue side too. Here's probably their biggest key metric increase was same-store sales was expected to come in at 1.6%. It came in at a whopping 5.1%.
Holy crud.
Yeah. So they should be on your big winners list today. They're up 14.5% this morning.
They are toward the top of the list this morning. That's interesting because Foot Locker and Hibbett are pretty much head-to-head competitors on product line. And Foot Locker's the name brand, for lack of a better term, the dominant name in the industry, but they're kind of getting their legs cut out from under them lately, evidently.
Yeah, it's become tougher and tougher for them to compete against the other stores. So the other one I have is The Buckle, which is a retail specialty type shop. They missed by 4 cents a share. Revenue, though, was in line with expectations. They had the exact opposite of Hibbett. Their same-store sales missed substantially. They missed by about 1.1%. They were expected to come in at 2.4. They came in at 1.3. And so they're down about a little over 1.5% this morning.
Mixed bag reports on retail this morning, I can tell that.
Yeah, so let's keep going retail. Ross Stores reported they beat by a penny a share. Revenue beat forecast. I didn't have their same store sales, but they've offered weaker than expected guidance for this next quarter. I find this interesting because it kind of lines up with Nordstrom's the other day, right? They're blaming it on the underperformance of women's apparel. Obviously, there's not high-priced women's apparel, but still, women's apparel is what the falter is there, and they're down a little over 1.5% also today.
I'm kind of looking at it too as the faltering of the off-price store concept in general. Remember, we had the report from the people that run Dress Barn a few days ago, and they announced a whole bunch of store closings. As a matter of fact, they're terminating the chain completely. Off-price retail, and might be a trend against them at the moment.
Well, and that could be. And then I have another shoe company, Decker Outdoor Shoes. They came in about 8 cents above estimates, beat Wall Street on revenue side, and they're looking pretty good this morning. They're up a little over 6.5% this morning. The last one I have for you is Intuit. And I did some searching on this because I was trying to figure out why it's down today, because it beat. I mean, it beat across the board. It was ahead 15 cents above estimates on earnings per share. Their revenue came in above estimates. The company raised their full year forecast. I'm thinking, what could be wrong? And
Yeah, what?
I don't know. I couldn't find it. I looked and I looked, but they're trading down 2.5% this morning.
I thought you were leading into something really earth-shaking there. It isn't inexplicable, isn't it?
Yeah. I kept looking and looking, and I couldn't find anything out in the news yet to tell me what the deal was. So that kind of wraps up our retail line today.
All righty. Well, reset the table again. Yesterday it was red ink across the board. All three of the major indexes down by like 1.25% to 1.5%. It was a crummy day overall. 45 minutes before we throw real money around this morning at 9:30. Phillip, are we going to see some green ink today?
We are, so people came in at the end of yesterday starting to buy, and it seems to be like that's the consensus today. We're heading up. The Dow's up 112 points, a little less than 0.5%. The S&P 500 is right there with it, up a little less than 0.5% at $12.85. NASDAQ's down about 1/3%. Up by about 1/3%, 25.5. Gold and silver are retreating just a little bit, and crude oil. Now, crude oil yesterday was down below $58 a barrel. Now we're coming back up a little bit today, and we're up a 1.25% to 58.62 a barrel. But hey, we're back below 60, and we're excited about that.
Oh yeah, that looks dog cheap compared to the 63s we were looking at just a couple of weeks ago.
Yeah, it is. And then we've got interest rates. Yesterday got down to about 2.3% on the 10-year Treasury. We're ticking up just a little bit today. But still, I think that's something we need to focus on, because that's going to give us indications of people moving to safety.
Absolutely. That's always the harbinger as to whether or not they're confident in the equities. Looking across the pond on equities, Asia, because we didn't have a lot of trade war news, is its usual mixed self. Japan's off by a bit. The mainland China market's up by just a little bit this morning. Europe responding to a little bit more focus out of England on the Brexit situation. Their markets are generally up midway through their trading day. Phillip, clarity is always needed as to how to plan a retirement, and now the upset's over in Europe and China's quiet for one day. Once again, getting some advice from an unbiased source makes sense. How do I find you on the phone?
It really does, Dave. And with all the volatility, it's a great time to get an x-ray report to make sure you don't have too much risk in your portfolio. To get yours, all you have to do is call 382-0037 to schedule your appointment. No obligation at all. And then check our website out, statlerfinancial.com, and then like our page on Facebook. We repeat this thing every morning at Statler Financial Services. And then the big deal is listen to us every weekend for our Statler Financial radio show, where we go into a lot of the information that you need to have a successful retirement. And that's at noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And streamed online at newstalk730am.com. It's amazing how well that works. We found the right name for the website, right?
That's right. Good deal. Tune in. Check us out. Hey, everybody have a great Memorial Day weekend. Be safe, and I look forward to speaking to you again on Tuesday.
And the same to you, sir. You have a meaningful and a blessed Memorial Day weekend, and we'll catch you Tuesday.
Sounds good, buddy. Thanks.
Thank you kindly. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Stop everything.
Hey, again, I want to thank you for joining us today. I want to remind you about our free report on understanding market corrections. All you have to do to get your free report is text the word market to 863-285-3815. That's text the word market to 863-285-3815 to get your free report. Hey, again, thanks for tuning in and listening to us this morning. Have a great Memorial Day weekend. Be safe. And I look forward to speaking to you again on Tuesday.